Hi guys, and welcome to Money and Purpose. If you are new here, my name is Zizi, and over on the channel we talk about personal finance, adulting, and living life meaningfully. So before you say anything, I know that we've been gone for a good minute. I do apologize for that, but we are back now with even better content for you, and I do want you to know that I appreciate your patience during this time that I have been gone. And since we have been on a little bit of a hiatus, I thought let's actually start off with a personal finance Q&A. I asked some of you guys on Instagram to send me some personal finance questions that you have, and then I would like to use this video to kind of answer those personal finance related questions. So the very first question says, would you advise someone to save money every month in a fixed account or to invest in shares? Okay, this is a question I actually get pretty often. So investing in shares is typically a means for us to build long-term wealth and to meet more long-term investment goals or objectives. So the answer to this question just kind of depends on where you are on your financial journey and the reason why you're actually saving this money. If you are at a point where you have already set up your retirement portfolio, you already have an emergency fund, you've paid off the majority of your short-term credit, things like credit cards, store accounts, I would suggest that you start investing in shares. But if you haven't yet set up those things which I mentioned, like you don't have your retirement portfolio in place, you don't have an emergency fund, you have a ton of debt, I wouldn't recommend that you invest in shares as yet. So I would rather suggest that you actually start with that, with building an emergency fund, a 3 to 6, maybe even up to 9-month emergency fund, depending on how volatile your monthly income is. Set up a proper retirement portfolio, either with your employer. If your employer doesn't offer it, then you would have to do it privately, and then pay off like a whole ton of your debt. The second question says, how can an 18-year-old start investing? Firstly, well done to you. Well done to you for taking such an initiative at such a young age. I know when I was 18 years old, I didn't even know what the word investing meant. Child, I was in my first year in fact I was in matric. So the fact that you're already thinking about these things is a really big kudos to you. And I think initiative in your personal finance is probably the very first and one of the most important steps. So how you can actually start investing, to be honest, you can kind of invest like any other adult in South Africa. When you're 18 years old, you can have your own bank account, you have an ID document, you don't need parental kind of guidance or signature in order to transact. So you can literally go and open up either a savings account at your local bank or an investment account at an asset management firm. I do think it's important to start off with some form of a goal and to decide at this point in your life what is it that you want to save or invest for. You can't just kind of invest for the sake of investing, invest for the sake of, you know, building long-term wealth, but there are some things that would typically come before you start building wealth. So things like setting up an emergency fund is a really good one. Saving up for your first car, or saving up for the first property that you want to move into and all the associated costs that are going to come with you moving out of your parents' home or wherever it is that you live, going to go stay in a place of your own. So come up with a goal, and then once you have a goal, that will kind of determine where exactly you're going to put your money and the type of, I guess, assets that you can actually allocate your money to. If, for example, you just want to put together a emergency fund that can cover your emergencies while you're still in school, a very basic bank account, savings account at ABSA or Capitec Bank would be quite sufficient, or a money market unit trust fund would be enough. If you're saving, say, to buy your first vehicle and you want to buy your first car when you're 25, then you know that you have like a 5 to 7 year time horizon. You can take a little bit of risk, maybe take a more balanced type of portfolio that has shares as well as bonds and property, just a variety of different asset classes. And then if you want to kind of start building wealth and start playing around with equity and actual assets that are going to assist your long-term wealth building objectives, then invest in shares. So it all just kind of depends on what your goal is and what you're trying to achieve by setting up your investment. So decide on that first. What is it that you're saving for? That will guide you as to how to save, where to save. The third question says, how to save up for a wedding. Oh, child. This is something I recently went through because, for those of you guys who don't know, I just recently got married. And let me tell you, weddings are expensive. They are more expensive than you think. And whatever you're thinking then, they're even more expensive than that. So I would think when it comes to saving up for a wedding, first find out how much weddings actually cost, or the type of wedding that you would ideally like to have. find out how much that costs. So talk to some friends, family members who've recently, and I repeat, recently got married, and find out from them how much they spent on their wedding. Friends of ours actually helped us with this. They literally sent us like their entire wedding budget spreadsheet, and that helped us to kind of gauge how much different things cost, like how much do flowers cost, how much do dresses cost, how much does makeup and hair cost, how much do venues cost, food, etc. So try to get a gauge as to how much it's going to cost you. Secondly, decide how much you are then willing and able to spend. So I, for example, do not believe in spending over like 150,000 rand on a wedding. Some people do, and that's perfectly legitimate if they can afford it. That is not something that I can personally afford, so that's not something that I would do. So when my husband and I were planning our wedding, we capped it at a specific amount, and we decided, Uti, you know what, we're not going to go above this specific amount. So decide for yourself, what is that amount for you? So then if you are planning to spend, say, 140,000 rand on your wedding, and you're getting married in the next 12 months, then literally divide that 140, 150 by 12, or rather by 11 actually, because most of your wedding expenses will need to be paid about a month prior to your wedding. So divide it up realistically and see, are you actually able to save 20,000 rand every single month towards your wedding, together with your partner, obviously. This question says, how does one go about buying a car? So I have a specific philosophy when it comes to purchasing cars. I do think that cars, where possible, should always be purchased cash. The rest of the situation, guys, is that cars are a depreciating asset. So let's say, for example, you buy a car for 200,000 rand. As you drive that car, it decreases and decreases and decreases and decreases in value. But when you choose to buy it on credit, although kind of the cash price of a car is 200,000 rand, you get that over a 5-year car loan, you end up really paying like 300,000 rand. So in essence, you buy a vehicle today for 200,000. You drive it for 5 years, and let's say in 5 years' time, it's actually worth 120,000 rand. But what you've actually paid over that 5-year period is 300,000. So out of your pocket, you've taken out 300,000 rand, but the actual asset that you have left is only worth 120,000. That's not the only reason why I believe in buying cars cash, but that's just one of them. But I'm assuming that this is referring to like how to buy a car on credit, because I do know that most people, including myself, bought our vehicles, at least our first vehicles, on credit. So when you're buying a car on credit, number one, decide, do you actually need a car? Secondly, if you do need a car, look at your budget and decide how much are you actually willing and able to spend on a car. And by that, I'm not just referring to the actual installment of the vehicle, but I'm also referring to the insurance costs, the monthly cost of petrol, as well as the yearly maintenance cost of the car. So decide, Uti, in any given month, how much money are you able and willing to actually put towards a car. Thirdly, look at your credit. Do you have a long enough credit record, and is your credit good? A good way to kind of have a look at what your credit looks like is to go onto TransUnion, and that's not the only platform that you can use to look at your credit, but that's the one that I use, and it's a pretty reliable one. So look at TransUnion, and they will kind of tell you what your credit score is, and if you have kind of any negative listings that need to be fixed or that you need to take care of. Once you've figured out your credit score, I would then say spend some time saving for a deposit. And a good way to do this is to actually take the money that you would be spending on your vehicle every single month, even now while you still don't have a car, take that money and put it away and save for a deposit. So if, for example, you are going to spend 5,000 rand a month on your car, that includes your car installment, your insurance, and the amount of petrol that you'd be spending every single month. Let's say that all equals to 5 grand. Put away that 5 grand into just a normal savings account every single month for like 6 months, and use that 30,000 rand that you would have accumulated as your deposit. While you are saving for your deposit, shop around. Have a look at the type of vehicles that you would ideally like to buy. Speak to some dealerships. I would always recommend that you buy a car that is a second hand or a car that is a demo. I do not believe it is a good financial decision to buy brand new cars unless you can absolutely afford to. But even when you can afford to, I just would never recommend that you buy a car brand new. I will make a separate video as to why. Once you've kind of figured out the vehicle that you want, start approaching dealers. sit down with a couple of dealers, test drive some of those cars that you've been looking into, and once you've decided on a specific car, put in an application. That's kind of how the process of buying a car works. What is the best way to start saving on a low income? I spend everything monthly. Okay, so this is tricky, and I guess it's tricky to answer because a very big part of personal finance and being able to kind of create a proper saving and investment portfolio for yourself is actually earning well, right? If you are at a point where the money that you earn is not really able to meet your basic everyday needs, like so you're not able to comfortably put a roof over your head, feed yourself and your family, clothe yourself, provide transportation for yourself. If your finances and your income is not able to cover those things, it is kind of almost virtually impossible to save, because you will always choose to feed yourself over putting money into an investment portfolio. That is a fact, and I don't think that anybody should ever be judged for that, and I don't think you should ever judge yourself for that. But to get back to the question, I'm assuming that you are able to cover all of your basic needs from the income that you earn, but you do kind of overspend on things that are more luxuries, and so as a result you're not able to save money. If that is your situation, I would suggest that you tally up what it is that you're spending your money on first. Start there. Look at this previous month, go through your bank statement and list out what is it that you have spent your money on, right? If let's say you're earning 20,000 Rand a month and everything that you spent that month equals up to 20,000 Rand, then have a look at what can I cut out? Of all these things that I'm spending my money on, what can I cut out? And look at the things that are the most luxurious and you can live without. So if, for example, you're not saving any money whatsoever, but you're spending like 2,000 Rand doing your nails, doing manicures, pedicures and hair every single month, and yet you don't have the ability to save, that's a good place to start. You know, learn to do your hair at home, learn to do your nails at home. Instead of spending 2,000 Rand a month, then spend like 400 Rand a month just to buy the products that you use for your hair and do everything at home. And then the balance of that you can start saving. So essentially what you're trying to do is reallocate money into savings other than spending. But in order to be able to reallocate that money, you need to know where is it coming out of. Secondly, I would suggest that you actually start budgeting on a month-to-month basis so that you can be able to give an account for where your money goes, not just from this previous month that you've just tallied up, but every other month going forward. And then thirdly, automate the savings. Automate, automate, automate. Don't leave it up to yourself to decide every single month, okay, this month I'm going to put away 500 Rand, this month I'm going to put away 1,000 Rand. Open up just a basic savings account at your local bank or one of the big banks, or even open up like a money market account at one of the asset managers and set up a recurring monthly debit order. I do want to say though that make your debit order realistic. So if like you can only reallocate 500 Rand into your savings from your spending, make the debit order 500 Rand. Don't make the debit order something exorbitant that you can't afford, because all that's going to end up happening is you're going to end up withdrawing that money and then you're going to feel like a failure. So try to be realistic about how much money you can actually allocate. It says, hi Zizi, would you say putting down a deposit on a vehicle is a yay or a nay? Definitely a yay. 1,000%, and the bigger the deposit, the better. The reason why a deposit is good, so I mentioned earlier, Uguti, I believe in buying vehicles cash, but I know that and I know that most people can't afford to do that. If you have to buy a car on credit, try to make sure that your deposit is as big as it can potentially be. The reason why a deposit is important is, number one, it decreases the amount of the loan that you have to take. So if, for example, you're buying a car for 150,000 Rand and you put down a 50,000 Rand deposit, that means then from the bank, you're only borrowing 100 grand as opposed to 150 grand. That's the first reason. Secondly, it's also important because it gives you leverage for negotiation. You can negotiate the price of the car when you have a really, really big deposit, and you can even negotiate the interest rate which the bank gives you for the loan that you're then going to take on for your vehicle. And the same applies to a house, guys. When you're buying a house, make sure your deposit is as big as you can possibly get it to, because that gives you leverage to negotiate the price of the house that you're buying, and it gives you leverage to negotiate the interest rate which your banks are offering you to take out that loan. So 100% put a deposit. This question says, how do you deal with black tax? Oh, child. To be honest, there isn't a one-size-fits-all for this question, because all of our circumstances are different, all of our family dynamics are different, all of the needs of our family are different. But I think some tips that would be applicable to most people is, firstly, incorporate your black tax expenses in your budget. Make it a line item in your budget. Even if you aren't necessarily in a situation where you are consistently sending money out to your family or paying for things for your family every single month, it really does help to just incorporate it into your budget, just in case the expense comes up and it doesn't derail your other kind of financial responsibilities. That's the first thing. Secondly, if you are not in a financial position where you can kind of finance like the entire life that your family may be living, opt to finance essentials, and also to finance things that are going to help your family in the long run. So essentials are obviously things like food, electricity, assisting with the actual expenses of the roof that is over their heads. And then things that will be beneficial to your family over the long term is things like education. I think that if there is a black tax expense that is worth paying, it is the education of your siblings. Because ensuring that your siblings have a very good education will be beneficial for everybody in the long run. It will help to ensure that your siblings are financially independent in the future, and so do not become financially dependent on you and do not become the financial burden of your parents. And it will also put them in a financial position where they can actually start assisting you with some of the black tax expenses that you have. So if possible, aim to finance things that are going to be beneficial for the family long term. And then last but not least, be realistic and honest with yourself about what you can and cannot do, and then communicate it. If you see from your current financial situation that you cannot afford, honestly and truly cannot afford to spend more than 1,000 Rand or more than 2,000 Rand assisting your family every single month, and your family does expect more than what you can afford, you need to be a grown-up and you need to learn to set a boundary and to communicate like honestly and openly with your family and say, look, with all the financial obligations that I have on a month-to-month basis, I cannot afford beyond a specific point. This question says, how do you make money from investing? Is it through selling? So this is not a question that I can answer like very easily, because it kind of depends on which type of investment you make and what assets you're investing in. But I'll try to provide like kind of umbrella answer that is applicable to most asset classes. So the way that you make money from investing is in two ways. One, capital gains, or two, income distributions or dividends in the case of shares. So capital gain basically means that you buy an asset at a specific price, and then you wait for that price to increase, and then you sell. Whatever that difference is between the money that you paid to acquire the asset and the money that you get paid to dispose of the asset, that is your capital gain. So for example, if your asset is a share, let's say you buy NASPA shares for, let's say 1,000 Rand today, and then you sell them off in 3 years time and they're worth 1,500 Rand, that difference between 1,000 and 1,500 Rand, that is what you kind of profit. And then similarly with a house as well, or an apartment, you can buy a piece of property today for 1 million Rand, sell it in, let's say, 5 to 10 years time for 1.5 million. That difference that you've made, that is how you've made money. That is your capital gain. The second way is through income or distributions. So in the case of property, for example, how you would make money through income on your property is that you would lease out your property to a tenant, and the money that you're generating every month in the rent that they pay. And similarly, there are some shares shares which are kind of known to be dividend paying shares, where every single quarter or every 6 months they pay out a dividend to their shareholders. So if you own a certain number of shares, you are entitled to then receive the dividends which that company has issued for that time period that you've had those shares. So those are the two main ways that you make money from investing, through capital gains as well as through income or distributions. Is it better to prioritize reducing your debt or having an emergency fund? So my philosophy on this is quite similar to a philosophy by Dave Ramsey. If you haven't read Dave Ramsey's book, The Total Money Makeover, I'm going to put a picture of it here. I highly recommend this book. But my philosophy on this question is kind of similar to his, in that I would suggest that you start off with a beginner emergency fund. And I would say you kind of have to decide what that is. For me, that's like typically 1 month's worth of your living expenses is like a beginner emergency fund. So if you know that like your rent, your groceries, your petrol, your internet, your electricity, like your essentials that you need every single month, let's say they add up to like 15,000 or 20,000 rand, make that like a beginner emergency fund, just 1 month worth of living expenses. Once you have your small beginner emergency fund, then go and pay off your debt, especially debt such as overdraft, credit cards, store cards, furniture accounts. Pay off that debt as soon as you possibly can, and your card as well. So essentially pay off all your debt, with the exception of your house. I know some people may differ on the vehicle one, because some people don't, because people have different philosophies and don't agree that you should pay off your car. If that's your choice, that's what you choose to do. But other types of debt, I would say, are quite crucial to pay off. If you're going to keep any type of debt, maybe just keep your vehicle and your mortgage, but pay everything else off. Once you've paid that off, then build like a sizable emergency fund. So this is typically either 3 months, 6 months, even up to 9 months of your living expenses, all depending on how volatile your monthly income is. So if you're like a freelancer and your income is very like unstable, I'll suggest a very big emergency fund, like a 9-month emergency fund. Whereas if you are like in a long-term permanent contract, you're never going to lose your job, you have like lifetime job security, 3 months is sufficient. So you kind of have to decide for yourself what type of emergency fund would be best suited for your for the volatility of your income. This question says, as a first-year working trainee earning around 15,000, can I really afford a car? Okay, so this kind of depends on what your actual financial situation is. So if you are in a situation where you are solely responsible for all of your expenses, like you have to pay your own rent, you're buying your own groceries, you have to pay your own medical aid fees and cover your own medical bills, and just kind of look after yourself in every sense of the word, if you're earning 15,000 rand, you probably can't afford a car. And the reason why this is because the cost of a vehicle is not just the installment that you're going to be paying. It's also the maintenance to keep that car running, as well as the insurance. And trust me, if you have a vehicle, you need insurance. But on the other hand, if you are living at home and you are not planning to move out of home anytime in the next couple of years, your parents are covering your groceries, your parents cover kind of the roof that is over your head, and you don't have that many financial obligations and responsibilities on you, on 15,000 rand you can afford a car. But even in that situation, I think it's important to ask yourself, if at this point in your life, do you need a car? Would having a car significantly make your life better? And if the answer to that is no, maybe consider not buying a car. But on 15,000 rand, can you buy a car? Yes, depending on what your other current financial responsibilities are. Okay, this question says, hello Sissy, please enlighten me on how I can grow my finances as a student. Again, a shout out to all the young people, especially the students who are taking charge and taking responsibility for their lives and for their finances. I have so much respect for you guys. So how you can grow your personal finances? First and foremost, educate yourself about personal finance. I think that this is one of the most important steps in our financial journey and on our journey to financial freedom. Educate yourself about personal finance. Watch YouTube content, read books, and stay informed about financial services and financial tools and how exactly they meet your needs both in the present as well as in the future. Secondly, start earning an income. I really recommend that people who are in university and just young people who are still at school start to earn their own incomes. Not just the income that you receive from your parents and from like your bursaries, but if you can get yourself a little bit of a side gig, get it and start making an income. I do think that once you start earning money and you start receiving money in your bank account that you've actually worked for, I do think it impacts your maturity quite significantly, and it impacts how you actually view money, because you start to see how hard you actually have to work in order to earn money. So I do think that having a job and earning some kind of an income, no matter how little it is quite important for your development as an adult. Thirdly, I would say build an emergency fund. Start by building an emergency fund. Think of all the possible emergencies that could happen in your life where you are right now. For example, a family member dying and you have to rush home, take a flight on short notice. Would you have the 2,000-3,000 rand to cover those flights? In a situation, if your parents weren't able to send you money for any reason, would you be able to cover your expenses for that month? Like, would you be able to buy your groceries? Would you be able to buy your toiletries? So think of the type of emergency that could occur where you are in the context of your life and build an emergency fund for that. Go to your local bank and just open a basic savings account and build an emergency fund. Which is the last question we're covering. Says, the company I work for has no benefits. How do I save for retirement myself? So this is a situation that quite a lot of people are in. So just know that you're not alone. Quite a lot of people are in this exact same situation. So you are able to build your own retirement portfolio outside of your employer. And you would typically do this through something called a retirement annuity. And a retirement annuity is basically a retirement specific investment wrapper that consists of different asset classes that make up that package. You are able to find retirement annuities at most asset managers in South Africa. So you can find it through Allan Gray, Coronation, Ned Group, Sanlam, and many other asset managers in the country. So literally all you have to do is to approach an asset manager in South Africa and ask them if you can open an RA, retirement annuity product. You will have to go through a FICA registration process, like how you have to do before you interact with any financial institution. They will set up an account for you, and then if you so wish, you can set up a regular debit order that's going to be coming off of your account every single month. Typically, the minimum amount of money you can put into a retirement annuity is 500 Rand. That's the minimum in some of the most popular asset managers, but it's up to you kind of how much money you decide to put in. In South Africa, you are able to put up to 28% of your gross income into your retirement products. So it's essentially up to you then to decide how much you put in, but just know that the cap is at about 28%. I could be wrong. Last I checked, the cap was 28% of your gross income. And the wonderful thing about retirement annuities is that, similar to pension and provident funds, money that you put into an RA is tax deductible. So when you are claiming for your taxes from SARS at the end of the tax year, if you are contributing from money that was already taxed, like in other words, if your salary came into your bank account already taxed and then you contributed money towards your RA, you would then qualify for a tax rebate from SARS. This is not the only way to save for retirement. You could also open kind of like a tax-free savings vehicle and use it as your retirement saving, or just any other investment vehicle really that you can open. However, just know though that the only way to get the retirement tax benefit is to either go through a retirement annuity or to go through a pension and provident fund through your employer. So since your employer doesn't provide that option of a retirement pension or provident fund, then the only option that remains for you, the only tax efficient option that remains for you, is to go via a retirement annuity. Alright, that is it for today's video, guys. I really hope that you enjoyed it. If you did, please go ahead and give it a thumbs up. Don't forget to subscribe to this channel for more personal finance content. And lastly, let me know in the comment section below if you have some of your own personal finance content that I can answer in future videos. Like with every other video that I make on this channel, all the content that I produce is purely for educational purposes. I am not a financial advisor, and so nothing that I say here should be taken as financial advice. If you are seeking financial advice, please consult with somebody who is a certified financial planner. Thanks so much for watching, guys. Cheers.